It's Wednesday, September the 3rd, and you are on the Ticks and Trades channel. So the tug of war continues. In the overnight session, the bulls managed to push price above an important trend line, a reasonably important trend line, and they were able to keep things elevated into the regular session. That same area came back into play again during the day and gave us some important clues. We'll talk more about that when we circle back to this daily chart later. For now, let's roll into the daily levels and the game plan from this morning. I pointed out that the trend line was running from about 641.20 to 642. It wasn't on the board, at least it wasn't drawn on the chart, but I made sure to explain it as a reference area. So around that area, we also had other official levels, each with their own potential importance. I also stressed something we've talked a lot about recently: don't trade blind. You can't just stare at the 1-minute chart and hope for the best. The higher time frames hold the context. When you see confluence between those larger chart signals and one of the posted levels, that's when you've got a potential trade worth trusting. As far as news goes, we did have some data releases this morning. They weren't really projected to carry the same punch as yesterday's PMI numbers, but I still made the point that you want to be aware of your surroundings. Even minor releases can tip price if the market is already jumpy. So this is what we had going into the morning, the levels, and the game plan. On this 1-minute chart for the entire day, you can see that price interacted with two levels. The first trade was right at 643.06, right after that 15-minute window open. So here's the 9:45 a.m. candle close. They were right below. So if you've gone short right then, within seconds, you would have had at least a 4-point base hit. And when we watch the recording of the live trade, you'll see that's exactly what I did. I got a few points there as they fell. Price pulled back pretty cleanly. So that's the first official trade. The second trade was a recycle off the same level. So they got above it. So now we're going to attempt to go long. There was a reaction, and they bounced at the level, but not quite enough to give us a 4-point base hit. That's a near miss of the profit objective. You want to jump out at the entry point if you can. That's a wash. The third trade was down at 640.58. So when adjusted with the 5-cent buffer, it was 640.63. And they hit this level to the penny and bounced. So another base hit just like that. So on a day like this with a good amount of back and forth, the rules still work, the levels still work, and they work often enough that if you stay disciplined, you build consistency over the long run. My first trade was the short at 643.06. It was per the rules. I ended up pulling slightly less than the full base hit because it happened pretty quick. I'll pause right here, 9:45. There we go. So I'm in the position, just went short at the market, and I was getting ready to adjust or trying to adjust this profit objective down here. I only had it at 3 points, and they were too fast. So I got filled there with 3 points, but I'm not going to complain. It was a quick $600 in the bag. So that's pretty much all I did until got back from lunch around 12:30 or so. Well, let me back up here. Willing to go short up here, but they never got high enough at this level. Never hit it today. So around, I think it was 12:35, got back from lunch, just pretty much stopped the recording. And then I was looking at things a little closer. So this stops right there. And there was another recording here, so I'm going to talk about this. Thought I was done for the day, but then I looked at some things. I started noticing a setup for possible decent pullback that was lining up in real time. So I jumped on, went short right here. So I'm already in this trade when I started the recording. I'll let this thing play for a little bit. You can see what I did. I set the target down here above the other level, eventually put a trailing stop. So I just wouldn't have to worry about it and just let it just do its own thing. And eventually that trailing stop, the trailer there got hit. So $550, another couple points, 2.75 points or so. So that was a nice little trade at the end there without having to babysit it too much. And then I just let this go for a while and end up stopping it quarter after one or so. On the tracking logs, the PBR, net 2 base hits, good for at least 8 points, 4 points each. And on the Sam's trades log, netted 5 3/4 points across 2 trades that you just saw, 4 contracts each, $11.50 before commissions. So what's next? They tried to close the day strong, considering where they were yesterday. They got above some key levels, so that gives the bulls something to hang their hats on. But don't forget that the bears have already had a taste of success with these recent pullbacks. The weekly timing signal we've been talking about is still in play, at least that's the way I see it, because we'd have to get a weekly close above 650. That's how high they got last week, or almost to it. So if they close a weekly candle above 650, then we might be having a different conversation. But unless that happens, I can't quite say that the reversal timing component thing is completely off the table. Could take some time if that's going to happen. In the meantime, this kind of middle ground here that we're in is pretty fertile territory for both sides to battle it out. This means plenty of opportunities for disciplined intraday traders as long as we respect the levels and the rules and don't overthink it. Sometimes I have a tendency to overthink it, but that's where we're at, kind of in the middle of stuff. Obviously, the bulls want to go higher. The bigger picture, we could have a bigger pullback if the bears want to make that weekly timing thing play out. We'll see. So that's a wrap for today's recap. So this tug of war is not finished. We'll see what happens. Things could get interesting next few sessions. As always, I hope this recap helped you see the market in a new light. If you're just getting started playing in the market, if you learn the SPY and the ES futures, it's a good way to get a feel for price action by way of identifying levels of support and resistance. That's just the way I do it. This approach applies to any other instrument too. If what you want to trade has a chart, you can determine likely places where the bulls and the bears will fight it out, or likely fight it out, and it's those places where we can pull points and dollars from the market. That's the way it works for me, at least. So trade smart, stay disciplined, and I'll talk to you in the next one.